Okay, hi everyone, it's Julie, and this webinar is going to talk about the charts that we have with the strategy of if there is a slope to trend, and if this slope is flat, we want to trail with the direction of that slope. So let's look first, because we start with the events. Let's go back through to the calendar, pull up the Econo Day calendar. Look back at this week. We've had good manufacturing, we've had good employment numbers, but it is mixed with productivity. Jobless claims were a miss, and PPI, most importantly, is showing that flat inflation. They call it disinflation. There is no inflation, as also supported by Friday's CPI number. So the Federal Reserve is in a bit of a quandary. They're going to take advantage of the current macroeconomics with the political stuff and start selling bonds because they've got to start normalizing their portfolios. But I think that they're going to not show any rate hike in August, and we're wondering about September. So that to me is going to mean that the main market, the ES, is going to be choppy. So in a flat, choppy market, you want to just trade the bands up and down. If it is trending, like we had a big sell-off yesterday, and you want to just, you know, go in one direction, right? So you just wait, get in that direction, and try to take some profits. Sometimes you get knocked out, especially if you're trading on these lower outside areas. I always like to wait for the pullbacks and then take the entries. But if it is a flat market where it's choppy, just trade the bands and or find a market that is trending. So the ES may not be the market that we want to see. But let me show you the gaps. There are some opportunities because we know where these locations are. First, I want you to notice that price on August 9th closed high at the midline level. Price always trades to this midline level in the ES, up or down. And if you know the direction that you're going in that market, that's a pretty good location to try to get involved in the market in that direction. But now that we're moving down and we've stopped at that gap right here from July 12th, we at July 12th gap line stopped it, bringing it back in. We can anticipate that this open, oops, the open on, oh, okay, I'm sorry, fumble fingers here. Here we go. 2461.50 on August 10th should act as resistance. So we know our boundaries. We're at two gaps, between two gaps, and we're just sort of floating around here at 24, 40, 25, kind of close to the bottom of that. So I would say it's a pretty high probability that price is going to flush down and hit this gap close right there. Hit that close. So be aware of where these gaps are, because that's what the market likes to do. Unless, if there's no gap, it's probably going to look for the close of that prior bar. So those make good entry locations, and that's why I've put them on the market analyzer to give us a heads up. And I've got a really good cheat sheet here for you with the momentum straight out of the box. Momentum smoothed a la William Blau. Thank you so much, Mr. Blau. And if it is trading directionally, you want to go in that direction. Here we have crossed below the zero line, indicating that there could be an expansion of momentum to the downside. But since we have hit that gap line and we're a mile away from the opposite gap line, I would probably see either some bouncies and some backfill at some point. So it could get choppy, messy in this market. And once we break that gap line and start moving, though, in that direction, you might want to hit it pretty quick to see, just in case there is a run for the races there. But otherwise, in a flat market, there's not much you can do except know where those top bands are and make your trading decision at that time. And for that, I have a solver that are helpful to identify these top and bottom conditions. Okay. Otherwise, we want to trend trade and find a market that is moving with the trend. But before that, let's go back and look at the calendar for next week. Well, we haven't talked about Friday's mediocre disinflation consumer price index. Very soft inflation continues, so that's got the Fed in a pickle. Next week, retail sales, Empire Manufacturing, import-export prices. So Tuesday is going to be a really good day to trade because it's going to give in business inventories, housing index. Tuesday the 15th, awesome day because of all that inflation numbers. So up or down, got to be ready. Uh, Wednesday, EIA, FOMC minutes, so that'll give us a little bit of a heads up on what their thinking is on balancing their balance sheet or whatever you call it, getting rid of some bonds or other things that they're holding on to. Industrial production, oops. Consumer sentiment, that's a good one to trade the bonds on at the end. So look for some more. Next week's going to be a good trading week. Monday, not so much on the table. You never know, though. It's either going to be flat or you'll get a surprise, something moving somewhere. But probably just relax on Monday and get ready for Tuesday. It looks like a big day. So let's go look at the daily charts. Look at gold. All right, so we're at the top of the band with a doji. So in an uptrend, 13 hasn't been hit. I know that that's a target for a lot of people. So keep your eye on 13 to the upside and be aware of where any time price crosses that open of the previous day, because that'll be a trigger for you to the downside and upside with a target here at 1300. First target. Let's look at the bonds since they're going to be in play this week. I would imagine if the trend continues from last week. And again, you can see that touch the band, go to the other side, touch the band, go to the other side. So it's pretty consistent. And it looks like we're coming up to that top band still. Got a little bit room to run. Momentum is up. Gas and crude we'll look at real quick. Okay, gas is caught a little of a bid getting off of its bottom here, poking out of the bands. Let's see if it continues running. It could be one of those poopy diaper candles. If it breaks the open to the downside, it'll probably run fast for the moving average. Running to the average. And we'll just keep an eye on a directional trade opportunity to the upside for this. Maybe bring it up here to 30.073, something like that. I don't even really want to talk about crude. I just don't like trading it anymore. It is just too much of a mess. That was quite a bumpy bottom yesterday, and finally did pull off of its bottom as Bloomberg started talking on TV regarding the backwardation that's currently in the market, and that front month is being bid. So here we're in an uptrend. We're at the going to that bottom band in an uptrend. So look for a buying opportunity here at support. Oops. Right there. Something like that. And if it doesn't continue climbing from here, this open again is what to watch at 48.43. Watch where those 8 a.m. opens are. They make some great levels in crude. Okay, and let's take a look at silver. Again, we should be seeing some higher closes on Friday, you would think. And it actually got an up and down and now up. So this is interesting. We closed above the prior day close by a nose, just right at that prior day close. So that's showing some sign of strength, I would say, for continuation, depending upon, like you say, what happens to that macroeconomic in the market, and you could see there was plenty of room to come back to the average even and pick up the trend. There, wherever it meets that. And to the upside, I guess this is the logical place to trade to, is the open, or close, excuse me, the open, yes. The gap open high, and it closed the gap. Look at that. Came down, closed the gap, and now it's running back up, and I missed it. Right there in front of me. How about that? Beautiful. Now see how technical these markets are? Did you see that where I just showed you it ran right back to the gap close and then turned around, closed high on its high. Where was I? I missed that. So that's that, and the lower time frame, let's look at that on silver. So here was the gap run, and then turn around and close on the high band. So yes, I would say that that's quite bullish. Anytime you see all green like that at $25 a tick, right? Okay, so bringing it down to a very small bar, that might be too small. Well, maybe not. Make for some good reversals or inflections. But especially the reversals. Anytime you can get a turn at an area, I'm telling you, I guess I have to change every single one of these. My apologies. There we go. Bottom band. Here's one here. Bottom band. Here's one here. Bottom band. You get the point. Okay, so just continue doing that, trading the pullbacks, and try to find the markets like silver that were just very strong. So that's about it. I hope you enjoyed it, and I will see you soon. Thank you.